Hey guys, welcome back to the channel. Sorry for not coming out with a video. Oh, I gotta do something real quick for my guys. Hey, are you a recruiter? Just a little inside joke for my guys, my classmates. I've been studying pretty hard. That's the reason I haven't been really dropping videos. But in my opinion, really, I always check the market. I'm always watching the market, and the market was very interesting to me. It was really interesting because I did buy on this dip right here. I bought on this dip down here, and I really was hoping for this dip. I was hoping for it to drop some more, and it kind of happened. We kind of was 10% down from the highs, and mainly the seemed like the biggest driver of this was those AI stocks. I still do think, in my opinion, I would be buying here. I've recommended a few people in my close circle to, it wouldn't hurt to put on a position. Of course, you don't want to go, I would put on maybe 25% of my position if I wasn't in this already. I am in this because I think the Qs and the SPY and the Dow and the the IWM are like the best instruments to invest in, just for the diversity that comes with it. But I just picked up some more yesterday. I picked up some yesterday, and I'm pretty much up like 3%. And I bought like I said, I bought here, I bought around here, and I picked up some more, and I'm hoping to see more of a pullback in the Qs. However, if you look at the SPY, I was hoping that like the SPY is only down 3%, the Qs is down 10%. All of the other major indices are not down pretty much. I think the Dow is doing pretty well. Oh, so same thing. I'm pretty sure down like 5%. And then you have the IW. I think they're doing pretty good. Let me see. Okay, same thing. But the Qs is pretty much like kind of like the best buy in my opinion because they pull back a lot more. And I'm not saying like, for example, like if we buy the Qs right now, in a few months we'll be breaking all-time highs. I really don't know when we'll get to all-time highs. Most likely by the end of the year we'll break through all-time highs, maybe. But it really depends on what happens to these memory stocks. It seemed like the big players, then the hyperscalers, your Microsoft, Amazon, Meta. It's good to watch their earnings because we get to see the market is looking at is if Meta, Google, and all these big players are raising their capex, meaning that they're gonna spend more on this crazy AI build out, that this is gonna cause these memory stocks to go up. And it seems like the Q top holdings are pretty. We have Nvidia, that's one of the top holdings. AMD, Micron, and most likely they're gonna be adding more in the years to come. So it seems like these AI players are gonna be driving the market for the next few years. However, sorry guys. However, I still believe in my theory that the market will pull back 20%, and that's on the SPY, not on the Qs. I do believe that the Qs can get there. But the only way we could have really got there, maybe pull back some more. We need some more dramatic news, like maybe more tension in the Middle East. I don't think we're gonna get any more because I feel like escalation is at the high point. But maybe if we, get to another level in the Iran war, I really was hoping that because I definitely wanted to continue buying. I definitely was looking forward to earnings not being as good, because if earnings were not as good, maybe we would get a harder pullback. So a harder pullback is just going to give us a better opportunity to make crazy returns, because when you look at the history of the Qs, like imagine if you was buying around these areas when it was down, I think like 25%, and you see the rip higher. Imagine if you was buying down here when it's when it pulled back, it looked like it pulled back like 30%, right? Imagine if you was buying down here and, see where it's at now Or imagine if you was buying down here. Like I usually buy at those areas. Like usually when the stock market is going up, I'm gonna be honest with you guys. I'll drop videos to help you guys, like to for knowledge based stuff. But I'm not really too interested in the market when it's going up. Like when it's going up, I'm not even looking at the market, to be honest. Like it does nothing for me besides help my portfolio and stuff like that go up. But I really care about the market when it's going down. And since we've been going down, I've been buying. And like I said, I've only been buying maybe 25%, right? However, my way of investing is pretty bold because I'm always a contrarian to what's happening in the market. Because when they're telling you to sell, I'm buying. And when usually people are buying, I'm letting off a lot of that position off because I feel like it's I'm never going to sell my whole position, but I'm going to let off a good percentage of my position because I feel like I've got my gain, right? So, in my opinion, right now in the market, I think this is a great buy. Amazon, I haven't looked at Amazon's earnings. I don't really care too much about Apple. The reason I don't care too much about Apple is because Apple is not really, they're not really putting any money into the, they haven't raised their capex to do this massive AI build out. So their earnings really doesn't really influence much of in my opinion, the Qs. But definitely go check out Amazon. Amazon, I think they're up like 10%. Let me see. They're up 10%. After hours, okay, close to 10%. I'm gonna go check their earnings out. I think I checked Apple. Apple was down. Apple's down almost down 7% after earnings. So I'm definitely gonna check theirs to see what caused that. But I'm only looking at right now. Definitely, if you're buying the Qs, you should be looking at the your chip stocks, your memory stocks, Micron, AMD, Nvidia. See what they're looking like. See what their earnings looking like, and definitely follow the hyperscalers. You definitely want to follow the Meta. You want to follow the Microsoft. All these guys who are investing over $100 billion of their free cash flow. I think Google just reported, Google reported negative free cash flow. And if you go back and see last time they reported negative free cash flow, I'm pretty sure it's been, maybe over 50 quarters that they've ever done that. So definitely go check that out. It's kind of weird when you guys, if you really think about it, I remember when Google, when last Google earnings, right? They raised capex, but not as high, and their numbers were okay, and that market rewarded them. They almost got to 5 trillion. Now Google is punished, Meta's punished, and now for the longest, Microsoft, I think for the last 2 quarters, they were being punished, and now they're being rewarded. Amazon is being rewarded, and I remember even with Apple at one point, Apple was being punished because they were not investing in AI, and now look at them. And that was down here, like kind of crazy. That was down here, I remember. It was around down here. Well, sorry, not around here. So some around here. They were basically being punished because they was not investing, and now that the investment into AI is being questioned, now they're like the darling. Now they hit 5 trillion. Congratulations to them. But yeah, again, like I said, just want to drop this video, guys, just to let you guys know. If you want to definitely get into this, I think it was a great time to buy the Qs. I think it's still a great time to buy the Qs. We're in correction territory, and watch my video about your money is made in bear markets, not bull markets. I promise you. You make your money. If you look at Warren Buffett, some of Warren Buffett's best years are after bear markets, making you should be understanding that you buy great companies in bear markets, and you keep them forever. If you get them at a crazy good deal, imagine buying the Qs down here. You holding the Qs till now. You think you'll be up almost 200%. But that's just what I wanted to talk to you guys about. You guys have a great one. And sorry for the burp right there too, guys. You have a good one.